Hi everyone, and thanks for tuning in to another episode of Budget Investing. So today I have a couple things that I want to go over with you fairly quickly. I have two articles that I've seen over the last little while that I thought were kind of interesting and definitely worth mentioning. And then from there, I have three stocks that I think you could potentially take a look at during the month of April. As of right now, they appear to be in a position that is definitely worth potentially adding to your portfolio or adding additional shares of into your portfolio. So the first article that I saw that I thought was quite interesting was the one that you see on your screen here. So the House passed a landmark bill to federally decriminalize cannabis Thursday. So if this is passed in the Senate, which is the next big step, that would be huge for a ton of people, as a lot of people that would have criminal records and all of that would no longer have those criminal records. The other piece that I think is very interesting, which we've kind of started to see all across the world in different countries, is as things become decriminalized, it kind of opens the door for a potential market to be there. And if the US of A were to actually gain a proper market for cannabis, that would open up so many potential opportunities for investing or medical side of things. There's just so much to look into for that. So I will personally be keeping a close eye on this to see what happens. One thing that the article does point out is, it is going to be challenging for the next steps of this to continue moving forward, which being the Senate, but it is certainly worth keeping an eye on. The next article that I saw that I think is worth sharing with everyone today is this piece that I saw on Yahoo Finance in regards to the federal meeting that just happened recently in the Treasury. So one big piece that they're looking at is the interest rate. They want to increase it upwards of 2.5% to 3% by 2024. Now, that's not a crazy huge jump, but when we look back historically, that's kind of the rate that we were at right before the pandemic really locked things down. And then historically, we've been fairly low for the last 20 years or so. We've had a couple big jumps here and there, but zooming in, you can see that we are barely at 0.5% right now. So if we were to jump all the way back up to 2.5% or 3%, that will drastically have a large impact on yours and mine's ability to continue to invest in the economy. Okay, so the first stock that I want to highlight to everyone today is Stella-Jones. So this company isn't anything that's totally crazy. It's a lumber company. They make important pieces for rail ties and construction, which as we're heading into the summer months of the year, construction is going to boom a little bit, and this company could potentially make some easy money in that regard. But they're a little bit undervalued right now, as you can see that their EPS, their earnings per share, is way down at 3. And typically the market average is around 15. So this is quite low. It's shockingly low right now. And looking at the 1-year target estimate, and this is kind of that average of the investors that follow these companies that they have placed in there, they're aiming for about 52. I've been holding them for quite a while. And looking at the revenue, you can see that year after year, they slowly are always kind of moving up. They had that huge jump in 2020, and of course that was to be expected from crazy lockdowns and everyone doing construction at home and that shortage of lumber that the world was kind of experiencing, but it has been slowly going up. The other piece that I want to highlight for you is the earnings per share. You can see that it's been, again, slowly inching up every year, so they're continuing to add more and more efficiency, and they're making more money for the investors like us. And at a really high level, I want to look at their dividend. As you can see, it is paying around 2.6%, which isn't crazy high by any standard. And they've been growing their dividend for at least 5 years, so in this case 18, and their 5-year growth rate is 13.825%. That's fantastic. Next up on our list here is Equitable Group. Now, this has actually been a company that I've been keeping a really close eye on for the last 6 months or so, and they've definitely been on my watch list, and I'm probably going to be looking to add a position here shortly. But I want to highlight again, as you can see, they're another finance company, but they are a little bit different than the comparison to the large banks that you and I probably already hold. They're a fintech type company. They don't have a home branch or anything like that, so they're able to save a lot of money in that capacity. They are worth $72 per share, but Their 1-year target that a lot of the experts are showing is $97 per share. That's fantastic. That is honestly a huge difference. That's over $20 profit per share if they were to hit that mark over the next little while. And they are growing very rapidly. If I scroll down here and you look at their earnings per share, they've been consistently beating their estimates of what they're going to have for earning per share. They had a huge profitable third quarter in 2021, which obviously really kind of catapulted them forward. And you can see again that their earnings are always growing. Kind of looking into them on Seeking Alpha again, you can see that their income is growing year after year. It has been consistently improving. That net interest income is growing as they're building out their portfolio and having more opportunities for someone like yourself or me to take loans out from them or have our savings with them and whatnot. They're really looking to be in a strong position and a great buy for us potentially now or in the near term. Now, the third and final stock that I have for everyone here today is Alimation Couchard, and this has been a company that I've kind of talked about a bunch over the last year or so, and it's definitely been a company that I already hold. And they've had a little bit of hiccup here and there, just like every other company. They were really trying to build out into the EV, and they had a big pushback in regards into France and what they were hoping to do. But I still think that they're positioned for a ton of growth going forward. And, they're $55. It's not horribly priced. Their 1-year estimate is 61, so there's definitely some room for them to grow in there. Someone like myself or you might know them more as like a Circle K, anything like that, but they're a very large company. They do have a global presence, so there's a lot to like about them. You can see that they are consistently beating their earnings per shares estimates. A little hiccup here and there, but that's to be expected. No company's going to be perfect in that regard. And looking into their revenue, you can see that it has been growing consistently. A bit of a hiccup during the COVID times a little bit, but they are looking like they're trending back upwards and making that improvement. And yes, their revenues were maybe a little bit stagnant during COVID, but you can see that those profits did not drop. So they were still sitting very strong in that regard during 2020. So they've definitely positioned themselves to be defensible during hiccups and things like that, where they're not going to suffer majorly. As well as their dividend has been growing, and of course that earnings per share is looking really solid. Again, it was around $1, and if you fast forward that all the way to today, it's at $2.50 per share, which is truly just fantastic, as it's showing that continuous growth is still occurring. So kind of in summary, it looks like there might be a new market in regards to cannabis opening up in the States. The federal government is looking to decrease debt, increase interest rates, and I have 3 stocks for you to potentially take a look at and see that they just might be a fit for you and your portfolio, as you might need them in a different sector that you don't have, or maybe you need to flesh out a little bit more for some more diversity. But if you enjoyed today's video, please do remember to like and subscribe, and don't be afraid to share it out with someone who you think might benefit from this. Otherwise, thank you so much for watching, and I'll see you in the next video.